Bhutan government moves $287 of Bitcoin in latest sovereign sale. Bhutan's government has moved roughly $287 million worth of Bitcoin from wallets tied to its state mining program, according to on-chain flow data circulated overnight by Coin Bureau. The transfer landed as Bitcoin reclaimed $77,035, up 2.1% on the day as of May 1, 2026, and continues a slow drumbeat of sovereign disposals from the Himalayan kingdom over the past 18 months. The Bhutan flow is not a single dramatic dump. It is a steady rotation. The state-owned holding company, Druk Holding and Investments, has been mining Bitcoin with hydroelectric power for years, and tranches periodically leave its known cluster of addresses for exchange-linked wallets. On-chain analysts have logged similar movements across 2024 and 2025, often in the 100 miller to 400 miller range. What the wallet movement actually shows, the 287 figure represents Bitcoin moving out of addresses Arkham and other tracking platforms have attributed to Bhutan's sovereign program. Movement is not the same as a market sale. Funds shifting to exchange deposit addresses suggest sale intent, but final execution can be staged across days or weeks through OTC desks to limit market impact. What is clear from the pattern, Bhutan has been a net seller for several quarters, even as other sovereign holders, including the United States, have either held or expanded reserves. The kingdom has used Bitcoin proceeds to fund civil service salary increases and to backstop budget gaps. That makes its program operationally different from a strategic reserve. It treats BTC as a working asset, not a permanent store. Why the timing matters less than the pattern, Bitcoin slipped below $74,000 earlier in the week before recovering to the $77,000 area. Sentiment readings remain neutral, with the Crypto Fear and Greed Index sitting at 42 as of May 1, 2026. Against that backdrop, a 287 sovereign rotation is meaningful supply, but not catastrophic. Daily spot volume across major venues is still measured in tens of billions, and Bitcoin's market cap is around 1.54 trillion. The more interesting variable is consistency. If Bhutan continues to rotate out of mined coins on a quarterly cadence, the cumulative drag on price over a year can run into low single-digit billions. That is small relative to ETF inflow scale, but it does change the marginal supply picture, especially during weeks when ETF flows are flat or negative. How sovereign holders are diverging sovereign Bitcoin behavior has split into three camps. The first is accumulators. El Salvador continues its small daily buys, and Czech Central Bank Research recently floated a 1% allocation model. The second is holders. The United States has retained a large seized stockpile without active sales since the Strategic Reserve Framework was floated. The third is monetizers. Bhutan, and to a lesser degree Germany in earlier cycles, treat their stack as a source of fiscal liquidity rather than a reserve asset. That divergence matters for anyone modeling sovereign demand as a price floor. Not every state Bitcoin holder is a long-term buyer. Some are sellers with predictable cadences. Implications for retail and institutional holders. For retail holders, the news is more about narrative texture than immediate price action. A $287 flow does not break the market, but it adds to the running tally of sovereign supply that has to be absorbed before any reserve thesis can fully play out. For institutional desks, the Bhutan pattern has become a tracked input. Several flow providers now flag Druk-attributed movements within hours, and these flags feed into short-term inventory models for market makers. Expect that to continue.